And we are, as a people, inherently and historically opposed to secret societies, to secret oaths, and to secret proceedings. For we are opposed around the world by a monolithic and ruthless conspiracy that relies primarily on covert means for expanding its sphere of influence.
It was 1776 when the founders signed the writ of independence from the Brits. It was revolution.
Welcome to the Republic for the United States of America. You may call me Kelby. I am an American. Today is the 21st of April, 2016. Tonight's RNN featured show is Connecting the Dots with Dan Happel. The RNN, which stands for the Republic News Network, has been doing these calls for about 6 years, and this has always been a friendly introduction for the people of the United States Corporation. It's true. Hard concept to grasp, but the United States is a federal corporation, and their exclusive jurisdiction lies within the District of Columbia. And you can find this information in the law under Title 28, Section 3002 and UCC 9-307H. The Republic government was just a bunch of U.S. citizens that realized we wanted to be Americans as our founders intended. We've been hard at work now for 8 years and have successfully re-inhabited the original government vacated under Lincoln in 1861. I know, it's hard to understand, it's hard to believe, but don't worry. We are law-abiding, peaceful Americans and very pro-government. You can consider the Republic members are simply tired of all the corruption that we see on a day-to-day basis. See, we found in the law that there's in fact two forms of government here on our land, and we did something about it. We are people, mothers, fathers, sons, daughters. We have families just like you. We simply found some truths. Now we're sharing all of these important truths with the rest of the world. So get ready to hear things that sound amazing and understand that you too can be a part of history. We welcome each one of you to the Republic for the United States of America. Please bow your heads. Father God, we want to thank you for this opportunity to participate in something that nobody has ever done on this land. Help us, Lord, unite as a body of people. Help the people that are frustrated, that are burdened, that are encumbered with debt, to come and unite as a body of people to work towards the re-inhabiting of this original de jure nation under the Declaration of Independence. Lord, help us be blessed by our actions, guide us and protect us, and we pray this in your Son's name. Amen. Ladies and gentlemen, I'd like to yield the floor to Mr. Dan Happel. Mr. Happel, I yield.
Thank you, Kelby, and it's a special privilege this week to be bringing this program to you with a very, very good friend of mine, Bob Fanning, who is a bond trader. He has had a seat at the Chicago Board of Trade for quite a long time. He's not there anymore, but he is living in Montana. He has been a stock and bond trader most of his professional life, and he's very familiar with the things that happened in the system and what's wrong and what's right with the system, and how that impacted us in 2008 and 2009 with the financial meltdown that we're all familiar with, and kind of take this opportunity to describe exactly how all this happened, and from an insider's point of view, give us an idea of what we can expect in the near future. And then we'll slide into another totally separate but very, very tied-in issue, and that is the Chicago Climate Exchange and the carbon credit trading system that's being planned for us. So, Bob, I want to introduce you and allow you to say a few things about your experience in the past, and then if you would, let's get right into your experiences and the various ways that you have discovered that the stock, bond, and futures markets are being manipulated.
Well, that's a tall order, Dan. I'll do the best I can. And the only thing I really have to bring to the table is the fact that I'm old. I'm 66 going on 67, and I've been around the block more than a few times. I was fortunate enough to have a father who had a doctorate in jurisprudence and specialized in constitutional law under Dean Clarence Mannion, who was considered the foremost authority in America on natural law. He was the dean at the University of Notre Dame's law school. Not only were my dad and my brother graduated from, but another fellow who many Americans are familiar with, Judge Andrew Napolitano, graduated from the University of Notre Dame's law school in 1975. Natural law is a cornerstone of American jurisprudence and our Constitution, and also the natural law that created the Magna Carta 800 years ago, which gave the sovereign individual the absolute right to self-governance. And that's why we're all here today, is to preserve our absolute right to govern ourselves. And the blood of 2 million American boys was given up to preserve those freedoms. And that's what we hope to do here today. I was very fortunate that my dad decided to get into the stock and bond brokerage business back in 1969. And he was very successful in finance. He had 6 sons and a daughter. All 6 sons went into finance. And it was kind of a contest at our house to talk about finance, economics, money and banking, and of course the Constitution. And I graduated from Notre Dame in 1973 and left the University of Notre Dame and became a cement truck driver. And my dad said, for God's sakes, Bob, Notre Dame education, do something. So I went down to Wall Street and became a trainee in January of 74 and studied under quite a few PhDs. And back then it really meant something to get onto Wall Street. It was usually reserved for WASPs from Ivy League schools. And I took to it like a duck to water. And I wanted to excel, not only because I wanted to make a lot of money, but I wanted to please my father. And so I got involved in complex finance. And by the ripe old age of 25, I was working for Payne Weber, and I had done the largest commodity tax straddle, a silver straddle, in Payne Weber's history. And with a reward of 6-figure commissions of one trade, I learned that the more complex you got, the deeper you delved intellectually into these problems, the more money you would make. So I always stuck my head into these types of transactions and was rewarded handsomely for doing it. So not only, Dan, did I go to I became the largest fixed income producer at A.G. Becker by the age of 31. So, being smart, cocksure of myself, I went down to the Chicago Board of Trade and became not only a trader, but an analyst. And I went after the biggest financial institutions in America, the biggest bond portfolios in America, Teachers Retirement System of the state of Illinois, Massachusetts Financial, Kemper, Fidelity, all household names. And I wrote a market letter every night with my trade recommendations of the next day and my economic interpretations. And I had done that sort of thing to the age of, I went down there at 31. By the age of 44, I bought a company outside the industry, an industrial company, M.H. Dietrich Company, which was founded in 1914. And we built 38,000 projects around the world, certainly not under my tutelage and direction, but the former owners had built most of the blast furnaces, incinerators, and kilns on the planet because their refractory engineering was considered to be the best in the world. Unfortunately, the company was hit with asbestos lawsuits. That was unfortunate for them. It was fortunate for me because I bought the company at bargain basement prices. And I turned the company around, cured the 40,000 lawsuits against the company, sued and prevailed against free insurance companies for more insurance, and I'm retired to Montana at the age of 54, and I've lived here in Montana for the last 20 years.
Well, Bob, that's a good place to jump into what you saw happening in the early 2000s in the financial markets and the way that the markets were being manipulated, the way that the derivatives market was being manipulated through things like liar loans with real estate and some of those things. Can you kind of get into that briefly?
I'd be delighted to, Dan. But let's go to the date that everybody remembers the best. Let's go to 9/11, 2001. And the United States of America was attacked. And I would imagine if your listening audience went to YouTube and put in their search engine 9/11 financial motive, you'll come up with 7 pages of videos that go into the financial motives for 9/11/01. Naive when America was attacked on 9/11/01 is one thing. Naive when America's financial system was attacked again in September of 2008 is another. Naive in 2016 is being a moron and a traitor by choice. So I encourage your audience to start looking and looking hard, because if we were attacked twice, the third time will be a charm. And it behooves everybody from the presidential candidates on down to Joe Sixpack to start looking into who attacked us, what was their motive, and what was their intent, and what are they up to now. And that's why I have come on to your show.
Okay, well, that's a good segue into asking you to maybe kind of define some of those attacks and how they're being manipulated and how they're being orchestrated, and what our audience needs to do about it.
Well, first, our audience needs to understand regulatory capture, regulatory arbitrage, and regulatory Fifth Amendment takings. Now, if we look at a taking, we can start with the Community Reinvestment Act and what that was all about, and who was behind the Community Reinvestment Act. And the Community Reinvestment Act is a source of all the fraudulent loans that blew up America's balance sheet. By blowing it up, I mean expanding it, expanding the assets and liabilities to the point where it's an enormous balance sheet. Fannie Mae spent $100 million in political contributions between 1989 and 2009 because they were allowed to blow up their balance sheet. Fannie Mae quadrupled their executive compensation during Mr. Jimmy Johnson's reign. We can learn all about that in a book by Gretchen Mortensen, who's a financial writer for the New York Times, and that book is called Reckless Endangerment. So Jimmy Johnson was pals with Bill Clinton, and Jimmy Johnson went to Bill Clinton realizing that if he could blow up his balance sheet at Fannie Mae, make a whole lot more assets and a whole lot more liabilities, that he could bring big returns to the bottom line, and that would be where he would be involved in what is called control fraud. Control fraud has been explained in great detail by one of my favorite financial geniuses. Her name is Janet Tavakoli. Tavakoli Finance is much more complex than the average Joe can read, but it is the Bible to how special investment vehicles and the derivatives attached are being used or were used to create toxic securitizations. Jimmy Johnson's reign bought off a lot of politicians based on the leverage from their balance sheet, and they got a lot of cooperations from Acorn, or organizations like Acorn, who was a solicitor of liar's loans and no-doc loans and all the toxicity that went into our financial system. None other than a community organizer by the name of Barack Obama. Jimmy Johnson was at Fannie Mae between 1993 and 2000. But they couldn't pull this type of activity off unless Congress helped them out. And I'm here to tell you that it was the 106th Congress that was the launching pad for the 4 satchel charges that blew up the American economy. The 106th Congress was in session between 1997 and 2001. For your listening audience who want to know more about the shenanigans that was pulled back then, there is a free PBS special, frontline special called The Warning. And in The Warning, you will see that Congress ignored the chairwoman of the CFTC, a Stanford lawyer by the name of Brooksley Bourne, and many others, and they went ahead and passed the Commodity Modernization Act. And she went before the 106th Congress in 1998, and she begged Congress for permission to regulate the unlisted, unregulated, secret, private treaty transactions known as over-the-counter derivatives. There's a big difference between over-the-counter derivatives and derivative futures and options that are listed on an exchange. And Warren Buffett knew that. Warren Buffett of Berkshire Hathaway, who's a right-hand man of Barack Obama now, he characterized these derivatives as weapons of mass financial destruction. How much are there out there? About 1.5 quadrillion of derivatives are out there under the cloak of the ISDA, International Swaps Dealers Association, and Goldman Sachs, J.P. Morgan have created a lion's share of these unregulated derivatives, or weapons of mass financial destruction.
Mm-hmm.
And
now,
so,
Bob, let's discuss the Glass-Steagall Act as well, and how that the repeal of Glass-Steagall allowed a lot of those banks to get into those kind of speculative investments, the real high-risk things.
that's an excellent question, Dan. And the 106th Congress, same group we just mentioned, repealed the 1934 Glass-Steagall Act, which put the Glass-Steagall Act said you can't act as a bank and a creator of securities. Well, that was, since the regulators had and have continue to be, the regulators are captured, regulatory capture. Since they have been captured by banksters who are paying off our elected officials, then it's no longer just Congress and the Senate or chairman of the various committees. These banksters have captured our printing press, and they're paying off anybody and everybody that they need to pay off in order to pull off their agenda. And the Glass-Steagall Act, once that wall was pulled down, and the too big to fail banks, especially Goldman Sachs and J.P. Morgan, as soon as they were allowed to create securitizations, they could bundle all of their loans, especially the garbage loans, and put them in bushel baskets that we know as collateralized debt obligations, special investment vehicles called collateralized debt obligations. And you could take bad loans, good loans, anything you wanted in terms of loans, and stick them in these bushel baskets. And then you would go to a rating agency, Standard & Poor's, Moody's, Fitch, and you could get them to be rated AAA, especially if you had CPAs looking the other way. You could get them to be rated AAA, and then the trick was to target specific tranches in these bushel baskets where the garbage lie, and you would know where the bushel baskets were placed. In every central bank, every pension fund, every insurance company, everybody on earth was sold these bushel baskets full of garbage with crosshairs on the garbage, and then companies like AIG and Citibank would write, in other words, sell premium, they would write credit default swaps on the garbage. Well, when the garbage blew up, they knew exactly where the garbage was, and the credit default swaps would be paid off. And since it was a risk to the system, systemic risk should be part of the 2016 election cycle conversation, because we now have more systemic risk with the Jamie Dimon Bankster bail-in bill, where 6,700 community banks all over America, everybody listening to this radio show has their money in one of those 6,700 community banks. And the Jamie Dimon Bankster bail-in bill says that when the next thing goes bad, that all 6,700 banks and their depositors would backstop this 1.5 quadrillion in unlisted, unregulated, opaque, not marked to the market derivatives. So this is a systemic risk that is now that the losses have been socialized, and carrying that derivatives book required zero interest rates, because for every 1% interest rates go up, the cost to the ISDA dealers in carrying 1.5 quadrillion in derivatives, their cost to carry. Remember that term, cost to carry. The cost to carry, if you've been denied a return on your bonds or your passbook or anything else where you've been trying to get a return on your money, the cost to carry, if interest rates are zero, because the Fed is manipulating the LIBOR rate, savers of the world are carrying these derivatives. They're carrying this derivative book. And when this derivative book goes bad, and it's gonna go bad, because when there's a counterparty failure, there are two counterparties to every transaction. When the counterparty fails, they now have, Jamie Dimon has the system rigged to where the losses are socialized, and 6,700 community banks are going to take the gas pipe. And it's not going to be just the guys who own the banks. It's going to be the depositors who have their money in the bank who are going to have to backstop these derivatives when they go tits up. So,
and Bob, getting into that, your comment about that, this is perfect, because what you're talking about is the $1.5 quadrillion potential liability worldwide is exactly the sort of thing that we saw with the bailout of the financial system in Greece, and where they went into people's accounts and they literally took part of those folks' accounts and would not allow them access to their own money. And now we're seeing worldwide, we're seeing net negative interest on savers, and this fits right into what you're talking about. So
the first bail-in, Dan, the first bail-in was when John Corzine and his MF Global went tits up because they were speculating in these European bonds, and Corzine went into your regular old commodity futures client accounts, and he sold their money too, and Corzine got away with it. You know, we see Bernie Madoff in prison. John Corzine is posing with young ladies on the beach for stealing $1.5 billion. So there's your first precedent that was set by a bail-in, is Corzine stealing the money that belonged to Commodity Futures account. Innocent bystanders, your cattle ranchers using their account at Ann Barnhart's brokerage firm. Regular, real people who had their money stolen, $1.5 billion, so Corzine could make good on his gambling habit. So, if you know there's no risk to yourself, that you'll never be prosecuted, and the system will backstop your gambling, aren't you encouraged to take greater and greater and greater risk if you're part of the old boys club?
Oh, sure.
So that's the first bail-in. But we do brought up the word bailout. And who backstopped the first bailout? The U.S. taxpayer to the tune of $13 trillion. And the FDIC, which no longer can backstop these types of losses. And since the FDIC is bust, then how are you going to get the printing press going fast enough to bail out 1.5 quadrillion in unlisted, unregulated, unmarked to the market, unknowable collateral when they go tits up? And Jamie Dimon said, well, we'll just socialize it. We'll just make everybody who has a passbook or checking account in all 6,700 of those American banks, we'll make them backstop this stuff. So this stuff was named by Warren Buffett as weapons of mass financial destruction. Why did Warren Buffett call them weapons of mass financial destruction? Because as chairman of Berkshire Hathaway, he made an acquisition, and the acquisition was a company that had OTC derivatives, and they went bad. And he tried to unwind them because he didn't want them in his balance sheet. And it cost him billions of dollars to unwind those derivatives. And so, who runs the United States government? The guys who have captured the printing press are the exact same guys who installed the chairman of the Federal Reserve, and that means they control the printing press, and the guys who control the Federal Reserve placed their chairman in place, according to Dr. Michael Hudson of the University of Missouri, Kansas City. The chairman of the Federal Reserve has his job as a result of the auction. They auction off the seat. And the two usual winners of the auction is Goldman Sachs or J.P. Morgan, the two biggest financial engineers of unregulated, unlisted, over-the-counter derivatives. There's not just credit default swaps. There's lots of derivatives in place, hedging lots of risks that we have no idea what to do because the 106th Congress decided to spit in Brooks Liborn's eye when she begged to regulate these derivatives, and they refused to honor her request. An expanded version of the story can be seen on PBS the front line, the men who sold the world. And you'll see.
That's an excellent place, Bob. We're going to take a short break here. Kelby, you need to make an announcement, and then we'll get back to this discussion again.
Thanks.
Thank you very much, Dan. Ladies and gentlemen, we hold these calls and or shows all throughout the week. If you would please join us. We do have several different topics. It is an important thing that we understand. The reinhabitation of the Republic started in 2010, and that we have to continue in understanding how to build it state by state, county by county. It starts with the people sitting down and organizing. So please join us on Wednesdays at 6 p.m. Pacific. You can get all the information for the past 7 years of phone calls at our website at republic4theunitedstates.org. Again, republic4theunitedstates.org, and you can look at on that website the call-in information and join us. We really do need your help, and we want and solicit you to become an active part of re-inhabiting our country with us. Mr. Dan Happel, I yield.
Thank you, Kelby. Bob, this is a really good discussion, and the thing that I think a lot of people don't realize is that in 2008, 2009, when we discovered the enormity of the complex investments known as derivatives, they did nothing to change the laws to tighten that up. In fact, since that time, they have grown threefold. And so the problem that we have now with that nightmare out there known as derivatives is now 3 times what it was before. And so would you kind of talk about how that is being impacted on us as a nation because of the attack on the dollar by what are known as the BRICS, the international opponents of our free market system, or supposedly free market system? But the BRICS are Brazil, Russia, India, China, and South Africa. And those are all either socialist or communist countries. Bob, would you discuss that a little bit, and how the attacks on our reserve currency roll will have a huge impact on average Americans?
Okay, well, that's a tall order on a multiple level question. So I'll go back to arbitrage. Robert Rubin was the partner in charge of arbitrage at Goldman Sachs, and he was also the Secretary of Treasury. And under him was the chairman of the Federal Reserve by the name of Alan Greenspan. And the financial collapse of 2008 was with malice aforethought, and the Greenspan put began at the Bank for International Settlements in 2000, where Alan Greenspan said, we're going to give double collateral value to real estate. Well, the chief economist at the Bank for International Settlements said, no way, this is insane. And he said it in front of the G20 in 2003 in Jackson Hole, Wyoming. So the Greenspan put was a rigged trade. It was set up over a period of years. And now to address your question, you have the United Nations, who is boasting that they run the world economy. And when they boast that the crown jewel of the United Nations running the world economy is the UN Agenda 21 that was started in 1992 in Rio de Janeiro by Maurice Strong, who insisted that the United States of America, American exceptionalism, our capitalist society, was a bad example. It was unsustainable. And so the Greenspan put was put in place by the globalists, the New World Order bunch, the same people that are trying to stop Trump. And what you had with Mr. Rubin, he was setting up an arbitrage to transfer American wealth out of the country. It wasn't good enough that they outsourced. According to Catherine Austin Fitz, who is a former partner at Dillon Reed and the undersecretary for HUD, Housing and Urban Development, under Bush 1, it wasn't good enough to transfer $23 trillion worth of jobs out of America. They decided they wanted to transfer your home equity. You know, in the name of social justice, we're going to transfer your home equity to a list of foreign banks as long as your arm. And that $13 trillion was transferred out of the country to foreign banks using credit default swaps that were the hedge against these collateralized debt obligations, these bushel baskets of garbage. And so with that money being transferred out of the country, too big to fail banks and brokerage firms executed the transactions. And one of the fellas who wrote the credit default swaps at Citibank, at the request of former Goldman Sachs partner and Secretary of Treasury Robert Rubin, Rubin dangled the chairmanship of the Citibank in front of Thomas G. Maharis, a guy who I traded with at the Chicago Board of Trade. He cleared Shatkin 815 green jacket at the Chicago Board of Trade. And Thomas G. Maharis was tickled to death to sell premium, which is dangerous as hell. The sale of premium, the sale of puts back in 1987. I was there. I was on the hardwood. Back in 1987, the crash of 87, which scared the bejesus out of America, taught Wall Street the game of writing premium. And they wrote premium in the credit default swaps, not only out of Citibank, but AIG. Where did AIG get their traders? AIG got their derivatives traders right off the trading desk that took Enron down. Oh, and what kind of investigation took place? Well, the investigation was underway, and the records of these investigations were in the World Trade Center. I believe it was Building 7, but don't hold me to it.
Mm-hmm.
And all of the records were destroyed. Now we have a motive for 9/11 that had nothing to do with 19 Saudis. So what I would say that they knew they were bringing on systemic failure when they wrote this naked premium. Go ahead, Dan. I want you to interrupt.
Well, actually, I think a lot of people don't realize that of that $853 billion so-called bailout, that was only the tip of the iceberg, and actually that the American taxpayers were being put on the hook for a huge amount beyond that. You're talking about the 13 trillion. Actually, I've read numbers as high as 26 trillion that have been used to bail out the derivatives market worldwide, and that is on the back of the taxpayers. Am I right?
You're absolutely correct. It's called socializing the losses, privatizing the winners and socializing the losses. And there's a reason Goldman Sachs has $1 trillion balance sheet. They bought the politicians, just like they're buying delegates in Colorado, just like they're buying delegates in Montana. The people who take money from these banksters are in bed with the same people who murdered 3,000 Americans on 9/11/01. And so when Rubin set up the trade, he was succeeded by Henry Paulson. And Henry Paulson called a meeting with Bush and his cabinet. Then he had to go to Congress. And Henry Paulson got down on one knee and begged for $787 billion from Nancy Pelosi. Oh, Mrs. Pelosi her ego was stroked good enough to where the precedent was set, and the money was taken from the taxpayer, and Goldman Sachs and their band of banksters were satisfied on the first go-round, but there was lots more to follow it. And we also have Arthur Levitt at the Securities and Exchange Committee, and he ignored Brooks Liborn as well. So you had the Securities Modernization Act as well as the repeal of the Glass-Steagall Act of 1934, which turned these banks into securitization mills, which created all these toxic securities that were put out into the system. And I hope that answered your question.
It does, Bob, and I really want to get into the discussion now. We're getting fairly close to the end of the program, so I want to make sure we have enough time to talk about the international efforts to use carbon as the new currency in an Agenda 21 world. And please elaborate on the political connection.
I'm tickled to death to do that from a personal point of view. I want to tell a personal story.
Good.
So I spent 4 years. I spent 14 years in the bond pit at the Chicago Board of Trade, and I did real well. I was much more successful than I deserved to be, and I had a great book of clients, which ultimately got bigger. And because of my uncle, who owned 3 car dealerships, as well as a chunk of the Chicago Bulls, as well as a chunk of the Chicago White Sox, I wanted an account. And I was a vice president at Drexel Burnham, working on the trading floor. And the guy who stood elbow to elbow with me day after day, Dr. Richard Sandor, who billed himself to his clients. He was a competitor at Drexel Burnham. He billed himself as the father of financial futures. And Sandor was more senior than I was, tight with management. And I went after Bill Miller at General Motors Pension Fund. And as I pulled in that account, which was the biggest flipper of S&P futures, bond futures, you name it, Sandor said I couldn't have the account to top management at Drexel Burnham, and I lost the account to Sandor, and so I got pissed and I left. But Sandor, I always kept my eye on him. He was about as low a human being as ever slithered the planet. And Sandor came up with this idea called the Chicago Climate Exchange, which I kept a real close eye on and followed all of everything on their websites, even after I left. And Sandor figured out how to tax the American people and American industry on the air that you breathe. And the Chicago Climate Exchange, on their own website, which has since been scrubbed from the internet, boasted that they would be trading $10 trillion notional amount of carbon credits. And so that's part of the story. The other part of the story is who gave Sandor the money to start the Chicago Climate Exchange. The Chicago Climate Exchange was started thanks to money that came from the Joyce Foundation. A director of the Joyce Foundation was Barack Obama, who gave Sandor the money to start the Chicago Climate Exchange. Sandor eventually decided he made enough money that he sold out his interest in it for a couple $100 million. Another fellow who owned a trading platform for the Chicago Climate Exchange was Franklin Raines, who succeeded Jimmy Johnson as chairman of Federal National Mortgage Association. And Jimmy Johnson sold out his trading platform for a couple $100 million. And now the guy who is out peddling global warming and carbon credit trading and taxation of the poor, the voiceless, and the common man, all 7 billion of us on the planet are going to pay jizya, which is Arabic for tribute. We're going to pay jizya in the form of carbon credits. It will be automatically charged every time you fill up your gas tank or do any other damn thing. The membership, those who bought the memberships in the Chicago Climate Exchange, were the coal-fired utilities that saw the handwriting on the wall. There's a war on coal. There's a war on carbon-based anything, whether it's oil or clean natural gas or coal. And the war is because they need the planet to think that it's in trouble when it's not. It's getting cooler, and they've been trying to sell us a bill of goods that has been getting warmer for 20 years. And their biggest salesman is Barack Hussein Obama. And Obama, when he was out peddling no-doc liar loans, one of the banks that did, and it ultimately went broke, was the Shore Bank. And Barack Obama is part of the Shore Bank. They do microfinance, just like Barack's mother. And this bank, Shore Bank, was slated to be the clearing bank of all $10 trillion worth of this stuff. And so we have a salesman who's peddling carbon credit trading, global warming, and he's got a financial conflict of interest every time he opens his big yap and talks about global warming. He's trying to line his own pocket.
And Bob, would you bring our friend Al Gore into this, because he certainly had a large part in this whole process too.
Al Gore has been peddling this for years. I don't know about anything about his financial conflict of interest, and it would be, I don't want to discredit what I'm saying by trying to peg Al Gore to it, other than saying it is not a leap to say that he may have had a financial interest in global warming as well.
Well, I know that he for sure has a strong interest in the climate change thing because he's made close to $1 billion off of various books and films and so forth that he's done. But also the connection between the IPCC, the International Panel on Climate Change, and the connection there with the funding of a world government system through this climate exchange and through this carbon credit system. And that will be the ultimate financier of world government. Am I correct on that, Bob?
Yes. Global warming will, according to Margaret Thatcher, global warming is a way to push socialism, global socialism, down everybody's throat. And they have to do it with some sort of cash flow. And it is not a leap to say that carbon taxation and carbon credit trading and all of the cash flow that's generated from that will be part of it. And what your audience needs to know is that Muslims are not allowed to pay or collect interest. But there's nothing in the Quran that says a thing about carbon credits or carbon debits. And so Muslims will be happy to pay their carbon debit when they fill up their gas tank. And what have you done with that? You have just drawn 1.5 billion people into the bankster system by replacing or supplementing interest with carbon credit. So that's how you get 1.5 billion brand new customers right away. And it's another way to prop up the price of a falling commodity, which is crude oil. Mm-hmm. And so there is a lot of reasons why folks are suspicious about global warming when they walk out the door and there's 2 feet of snow and it stays at 20 below for a week at a crack in Montana.
Right. Well, this is a good point, and we're kind of running toward the end of our show here, but this is a good point to ask you to give us your feelings about the best way to stop this sellout and how we can expose more of these bad characters and how we can protect our savings.
Well, the first thing you have to understand is they're not just interested in the financial markets or the carbon credit markets. They're interested in water now too. We have an asset class in Montana that is tied to real estate, tied to agriculture, and our globalist buddies are saying that beef production is unsustainable. Well, the asset class of water is being monetized. The asset class of water is being stolen and given to the federal government. And we have right here in our Montana legislature corrupt officials, corrupt legislators that are taking payoffs anywhere from $1.8 million down to $20,000. They're taking money to facilitate the monetization of water. And when they do that, then another regulatory capture, regulatory arbitrage, regulatory Fifth Amendment takings takes place. So what we have to do is start sanctioning, and I'm talking about long prison sentences, sanctioning those who are corrupt, those who have taken the money, and keeping an eye on our elected officials who will sell us out, whether it's to be delegates to political conventions or to sell your title to your water to Wall Street for the monetization of water. And who thinks water is important? Go ahead.
Well, I tell you, I think we're going to have to save this for a later discussion. This has been a terrific show. I appreciate your giving us the kind of information that you have. I think you've given us a tremendous amount of insight. And I thank our listeners for joining us in this program today. And I would like to invite you to come back next week for another show that we will be connecting the dots. And Bob, I'd like to mention that I would like to have you back at some point in the future so that we can continue to connect the dots on the money, banking, and the scam artists and high places that are taking our system. So
by bribing our public officials.
And bribing our public officials. And Kelby, I'll turn it over to you, and thank you.
Bob, you are a wealth of knowledge. Thank you very much. And Dan, thank you again. Ladies and gentlemen, that is going to conclude our weekly broadcast at the Republic News Network. This is something that we do every week at 6 p.m. Pacific. We do encourage you to please grab a friend, bring them to our show, and encourage them to understand what it takes to re-inhabit from the bottom up this Republic Nation that we have. We look forward to seeing you guys next week again at 6 p.m. Pacific. God bless, and good night.